The 9 Limited, NASDAQ ticker NCTY, just dropped their Q2 2026 earnings report. And the numbers, well, they are wild for a company that IPO'd back in 2004.
Right, yeah. You really don't expect a legacy tech company to suddenly post a record first-half net income of 55 million US dollars.
Exactly, 55 million. And Q2 alone was 32 million, which is a 39% jump sequentially. But reading the source document, I mean, it's a total trip.
It really is. It reads less like a software firm and more like, I don't know, a hedge fund running out of a crypto startup's garage.
Right. So our mission for this deep dive is to unpack these massive numbers. How is the 9 hitting this overnight windfall with this bizarre mix of AI, crypto, and biotech? And, what is the actual reality behind that $55 million?
Yeah, that's the big puzzle here, because that 32 million for Q2, well, it's not cash flowing from traditional sales.
Right.
It's almost entirely driven by what they call fair value recognition of their 9BIT tokens.
So they're basically paying themselves in their own tokens.
Yeah, essentially. Under this Panama-based foundation agreement, they took in 475 million of these tokens just in Q2.
Oh, wow.
Yeah, bringing their first half total to 1.9 billion tokens.
Okay, so it's like going to an arcade, hitting the jackpot, but you get paid in paper tickets, right? You are technically rich, but only inside the arcade.
Exactly. Between those 1.9 billion tokens and their 347 Bitcoin, they are sitting on roughly $120 million in crypto.
But there has to be a huge liquidity catch for anyone trying to actually cash that out.
Oh, it's severe. The daily trading volume for 9BIT across all exchanges is only about $10 million.
Ah, I see. So if they tried to dump that stash, they'd just tank the market.
Completely crash it, yeah. So for now, that 120 million is largely just a paper valuation.
Okay, so they are hoarding billions of illiquid tokens. There has to be some operational use case. I mean, why have them?
Well, they act as the internal currency for the 9-bit, which is their AI native production platform. Instead of spending hard cash on development, they use these tokens to incentivize creators to make interactive content. They're basically crowdsourcing the whole ecosystem.
Right, and the report says they've generated over 180,000 AI-assisted games through this. But I have to push back here. Are these actually playable games or just, a flood of AI junk?
Honestly, a lot of it is probably just noise at this stage. But playable quality isn't really the immediate goal.
Oh, really? Then what is?
Data. The report outlines this model-agnostic orchestration layer. So when a user puts in a natural language prompt, the system routes tasks to different specialized AI models.
Okay, so every game they make, even the terrible ones, is basically training the system.
Precisely. They call it production intelligence. The platform learns how to automate workflows and route tasks better as it scales up.
So they are training their AI infrastructure at scale, and they're actually commercializing it too. They signed 41 brand partners in Southeast Asia to connect this virtual creator community with offline marketing.
Yeah, with 127 more partners in the pipeline, which is wild. They're building a massive orchestration engine here.
Right.
And the craziest part is they aren't stopping at digital content. They are taking this exact same philosophy, using AI to accelerate workflows, and applying it to biology.
Which brings us to the biotech spinoff Nanyang Biologics, or NYB.
Exactly.
So on August 19th, SPAC shareholders actually approved a merger to take this AI drug discovery company public on the NASDAQ.
Yeah, and that leaves the N9 with a 15 to 16% stake in the new entity.
But the part that really caught my eye is the executive incentive plan tied to all of this. The board gave senior management up to 12% in equity awards, but only if they beat Q1's net income of $23 million in subsequent quarters.
Which, at 32 million, they obviously easily did in Q2. It's a very aggressive alignment structure.
Yeah, I mean, if you were listening to this, you have to be wondering how a regulatory board lets management base massive bonuses on net income that's currently propped up by their own illiquid token valuation.
It is a completely circular loop. It definitely creates huge motivation for the executives, but it highlights the immense risks they outline in their forward-looking statements.
Like the extreme crypto volatility and the lack of liquidity we mentioned earlier?
Right. Plus, entirely uncertain regulatory frameworks governing these token economies.
So stepping back, The9 is operating less like a traditional tech company and much more like a multi-engine venture fund, blending AI, biotech, and tokenomics.
Yeah, it's a completely different blueprint for value creation. They use token valuations to fund AI development, which then feeds into multiple sectors, including pharmaceuticals.
Which leaves you with a really tough question to ponder. If more legacy tech companies start using their own proprietary crypto tokens to inflate their balance sheets, how will everyday retail investors be able to distinguish actual operating success from mere crypto speculation?
Yeah, that line is getting awfully thin.
It really is. Well, that's all for today's dive into the numbers. Make sure to follow the show for your daily earnings coverage.